All right, team, welcome back. Today, we're taking a deep dive into Uber, ticker symbol UBR. This stock has been on a roller coaster, and with recent price action hinting at a critical juncture, we're going to break down exactly what's happening under the hood and on the charts. So, what's the buzz around Uber right now? On one hand, we've seen some absolutely stellar operational performance. Q3 2025 was a blowout with accelerated trips and gross bookings, and management is guiding for continued strong growth into Q4. This tells us the company is executing, making money, and strengthening its market position. But here's the kicker. Despite all that top-line goodness, analysts are projecting a slight negative long-term EPS growth. This creates a fascinating disconnect where strong current performance meets a cautious future outlook on the bottom line. Plus, the charts are screaming caution, which adds another layer to our narrative. For those new to the game, Uber Technologies Inc. is the titan of ride-sharing and delivery. They connect you with rides, whether it's a car, motorbike, or even a rickshaw through their mobility segment. Then there's delivery, which brings your favorite meals, groceries, and more right to your door. And let's not forget freight, connecting carriers with shippers. They're a global powerhouse, operating across multiple continents. Management recently confirmed their robust operational execution, guiding for continued high teens gross bookings growth and low to mid-30s EBITDA growth for Q4. Sounds great, right? Let's see how that translates into our scenarios. Now for the main event, our scenario analysis. This is where we reconcile that compelling operational guidance with the more cautious long-term EPS outlook from analysts, then layer on our technical insights. First, let's talk about how we're bridging that gap between Uber's impressive Q3 and Q4 guidance and the analysts' slightly negative long-term EPS growth projection. We're looking at a company clearly firing on all cylinders operationally, but we have to consider if that translates into sustained, recurring EPS growth, or if there are non-recurring factors at play that might normalize over time. That's the tightrope we're walking. Now, let's break down the three paths Uber could take. The base case. I'm giving this scenario a 45% probability. Here, we're assuming Uber sustains its profitable growth, leveraging its market dominance and improving efficiencies. While the technicals show a recent break below $83.50, the strong underlying fundamentals suggest any technical weakness might be temporary if earnings continue to impress. For our valuation, we start with the current diluted EPS of $7.79. Given the strong operational outlook, but that cautious long-term EPS projection, we'll assume a flat EPS for the next year, meaning $7.79 again. Then we apply a target PE multiple of 11x, slightly above the current 10.7x, reflecting sustained operational improvements but still keeping a cautious eye on that mixed EPS outlook. That brings us to a fair value of $85.69. Next, the bull case. This one gets a 15% probability. For this to happen, Uber would need to significantly outperform, with sustained high teens gross bookings growth converting directly into accelerating recurring EPS. This means the negative long-term EPS projection was just too pessimistic, and Uber finds new profitable growth avenues. For our valuation, we start with that $7.79 current diluted EPS. Despite the analysts' long-term projection, we're assuming Uber's operational improvements lead to a 10% positive recurring EPS growth, bringing us to $8.57 for the next year. We then apply an expanded PE multiple of 14x, reflecting strong execution and an improved outlook. This gives us a fair value of $120. I've assigned a lower probability here because for this scenario to materialize, the stock would need to overcome its current downtrend and maintain above $96, which we just aren't seeing right now. And finally, the bear case. I'm giving this a higher probability of 40%, and here's why. This scenario sees regulatory headwinds intensify, maybe an economic slowdown hits discretionary spending, or competition eats into margins. This aligns perfectly with that negative long-term EPS growth projection, suggesting the current high EPS might not be sustainable. Crucially, the technical analysis strongly supports this scenario, indicating the stock has just broken below a crucial support at $83.50, implying significant near-term downside. For our valuation, we start with the $7.79 current diluted EPS. We project a substantial EPS decline of 10% for the next year, reflecting those pressures, bringing us to $7.01. Then we apply a conservative PE multiple of 9x, reflecting increased risk and declining earnings. That lands us at a fair value of $63.09. That technical breakdown elevates the probability of this bear case considerably. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. Uber has been in a clear downtrend for weeks now. It's currently sitting right on a critical support level at $83.50. If this level breaks, and remember, the bear case is hinting at just that, then the next support levels we're watching are 77.30 and then 70. To even think about resuming an uptrend, Uber needs to convincingly maintain above 96. Right now, it's not looking good for the bulls on the charts. So, is the bottom in for Uber? Based on our deep dive, the answer is a resounding not yet, team. While the operational performance and management guidance are impressive, the mixed long-term EPS outlook combined with that critical technical breakdown makes me lean cautious. With the bear case carrying a 40% probability and our base case at 45%, the immediate path of least resistance appears to be downwards or sideways, not upwards. The broken support at $83.50 is a significant red flag, pushing the probability towards more downside, at least in the short term. We need to see a convincing rebound above $96 or a significant re-rating on the long-term EPS outlook before we can call a bottom. Given our scenario analysis and the current technical weakness, I'd be looking for potential levels of interest closer to the bear case fair value, or where we see strong technical support holding. Those technical support levels at $77.30 and especially $70 could be interesting areas for those willing to take on more risk, aligning with our bear case fair value around $63.09. However, any entry would need to be accompanied by clear signs of a technical reversal or a fundamental shift in that long-term EPS outlook. Tread carefully here. That's it for our deep dive into Uber. What do you think? Are you bullish, bearish, or just holding for now? Let me know in the comments below. Don't forget to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next episode. As always, stay smart out there. I am not a financial advisor. This content is for informational and educational purposes only and should not be considered investment advice. Investing in securities involves risk, and you could lose money. Always do your own research and consult with a qualified financial professional before making any investment decisions.